Hey, good morning. Good morning, Jason. Morning, Al. Morning, Valerie. Morning, Harry. Good morning, everybody. How's it going? Morning, Patrick. Sledge, my man. Whew. Point clear in Alabama. That's all. That's down in LA, lower Alabama. Anyway. All right. Walter, morning. Hopefully you got the chart I threw at you on Super Micro. And big, I guess the big event of the day. Will Congress play Let's Make a Deal, or are they going to burn this sucker down? No, it's not a given that the U.S. defaults today, or tomorrow, or whenever. Uh, we don't actually get the read on the Treasury statement until Friday after the market closes for the week. So, but I'm sure it'll be big news if we have to start deferring payments. Lots of problems occur if we start not paying the Treasury obligations. All those obligations were used as collateral for a lot of, this is like the Fed and the central bank's guidance was to use treasuries as your collateral in the bank. I mean, that was like the Dodd-Frank whole situation. And Goose and I have been talking about this quite a bit. Is like, this is the safest thing. And all these banks that have been blowing up, they're like, oh, they were doing risky stuff, blah, blah, blah. No, they were actually doing what the Fed told them to do. They were doing the safe thing, putting their money in treasuries. The problem is the treasury value dropped because of the rapid interest rate raises. The Fed has created their own problem by telling banks what to do with their own guidance. So you can say that banks were being risky, blah blah blah, but it's just not the truth. They were doing what they were told, and now they're paying the price for doing what they were told. If we keep raising rates and keep screwing with the treasuries, this problem just gets worse and worse. So, if the treasuries don't pay out, like, the value of them is going to plummet, and it's going to cause all sorts of problems in the market. I mean, you've got clearing firms, not just brokerages, but clearing firms that could potentially have a capital issue, and the stock market just seize, if not just completely have a major problem. So this is the risk out there if they don't do this debt deal. Now, this didn't exist before. Like, this is all Dodd-Frank stuff, readjusting of the capital, and we've actually never defaulted before. We just got close. But if they punt on this today, if they were out there beating their chest yesterday, saying they weren't going to do the deal, this is a hazard. This is a big hazard in the market right now. So we got to watch this, all right? Stay tuned. I'll be on top of it all day. We'll talk about it tomorrow, whatever's happening, of course. And, and if you're in Discord, links in the description. We'll talk about it all day. So, now, all that said, if you want to chat with me this morning, I've got Walter, Workman Smith, Alan, Michael, Dex, Francois, sorry. Everybody's in the chat. If you want to join the live stream chat while I'm live, just click the subscribe button. A few seconds later, boom, you can chat with us. If you're watching this later, after the live stream's done, maybe after like 9:30, 9:40 Eastern time, then leave me a note in the comments below, and I will do my best to get back to you. All right, moving on. So calendar for the day. We got Jolts opening, Jolts. That's a tongue twister for me for some reason. Jolts job openings. Adding too many S's. We're expecting a 9.41, previous 9.59. Wouldn't surprise me if this came in under. And we were kind of getting a build here. It wouldn't surprise me if we came back down closer to 9. Maybe even in the 8s. I mean, we kind of rapidly popped up. It would not surprise me if we popped down here that could be very bullish for the market if that number came out surprising big time to the downside. It did right back here. I mean, surprise. They were expecting a 10.94, got a 10.21. We could, expecting a 9.41, we could get something right around high 8s or 9 million. We'll see. If it does that, then I expect a big pop in the market. Why? Because that's one of the metrics the Fed is looking for is job openings to drop out. I'm not sure that there's actually 9 million jobs hanging out there. Call me crazy. Anyway, we got also coming up at noon 30, Fed member Harker speaking. And then at 1:30, we have Fed member Jefferson speaking. So I'm not sure why Harker has more orange color to him than Jefferson, but those Fed members speaking can create volatility, and you're like, what the heck is happening? Why is the market going crazy? It's just based on their comments, whatever they say. So keep it in mind. We can see some volatility around lunchtime. And then tomorrow, let's see what we got coming up. We got non-farm employment change, unemployment claims, revised non-farm productivity, revised unit labor costs. Then we got final manufacturing PMI. We got ISM manufacturing PMI, ISM manufacturing prices, construction spending, vehicle sales, natural gas, crude, Fed member Harker again. So coming up tomorrow, lots more stuff all the way through 1 o'clock. Looks like we could end the week kind of volatile here as we move into June, which, imagine that, moving into June, volatility. Crazy, right? Hey, Dex. Hey, Patrick. Morning. All right. So I should do this part. All trading involves a substantial risk of loss. Any trade I talk about may or may not work because past performance is not necessarily, it's not indicative of future results at all. It's, necessarily, it's not indicative of future results. I mean, just because something worked in the past doesn't mean it'll ever work again. This presentation here is intended to be informational, educational, and fun. It's not a recommendation to buy or sell anything, financial instrument or otherwise. Don't make your own decisions. Don't just copy stuff I say. And if you desire personal financial advice, you need to hire and consult a financial advisor that has a fiduciary duty to give you advice based on your financial situation. This one was interesting. We looked at this briefly last night. DGS2 coming back up. Fed funds rate trying to squeak out a move up into here. I drew that sideways. That's kind of what we got. We're cooking sideways. If the 2-year Treasury pops back up through the Fed's rate there, then we could definitely see this go on higher. We could see this take off again, and then they catch up again somewhere up here, maybe up in the 7, 8, 9 area. Ouch, right? Like, the market's not expecting that. So what could happen? One of my philosophies, what could happen that nobody expects? This going sideways for a few months, crossing back over and going on higher. That could be the thing that nobody expects. Now, the timeline here, probably not out to 2026. It could be maybe out to 2025 before this problem, before we cross back again, as in the blue dips back under the orange. We could see it cross here in the next couple months. The 2-year Treasury and the Fed kind of saying they're holding, and then all of a sudden they're like, "Oh my gosh, we gotta catch up again," and then inflation starts rocking again. This could all happen. That's the thing that most people aren't expecting. Every mainstream media source I've heard talks about how they're going to cut rates. They're going to have to cut rates. They're going to have to, get growth going again. What if they don't? What if they start accelerating rate raises again? And think about that. Like what I said in the beginning there about the banks using the treasuries. as their collateral. What kind of problem does that cause? All right, I don't think this banking situation is even partway done yet. So be very, very, very careful. Be very careful. All right. Moving on. Let's talk about what's actually moving today, what we expect to happen. It's S&P 500 yesterday, trying to break out higher, got a rejection. This one, retesting these highs is classic. Retesting the box, also classic. And it may do that. Now, this is one thing, we don't have a lot of energy built up to go lower right now. Despite the high price here, S5FI coming in at 33. We may be looking at a potential big pop in the market setting up here. We usually don't go much below 20 before we get a strong reversal to the upside. And this is stocks above their 50-day moving average on the S&P 500. So you've got 500 stocks, and 33% of them are above their 50-day moving average, while 66% of them, 67% are hanging out below their 50-day moving average. All right, and looking at it on NDFI, how in the devil, if you have 100 stocks, that you get a 0.5, I have no idea. But Indy 5FI hanging out right in the middle. We're not seeing NASDAQ raging hot. We're not seeing it raging cold. We're just right in the middle. All right, even though NASDAQ has the potential for a larger retrace, when we look at how far up it's come, the Indy 5FI and NASDAQ stocks above their 50-day moving average is just hanging out right in the middle. So this move up is based on a few stocks. But there's not a lot of energy to go down except taking the wind out of those big stocks. That's one reason why I'm like red light caution, danger close on NVIDIA and other things that have gone absolutely straight up, crazy moves up. This is another one. Be freaking careful. That can be the target right there, 46. That can be as high as we go, and then we retrace all the way back down to the roadmap line, hanging out right down here around 20. I can get cut in half again. You're going to be like, JT, that's not possible. Look at this move right here. That took a 50% haircut. Got whacked for 50% right there. So these things can happen here. All right. That was an exponential move, and we exponentially came right back down to the zone. This was another exponential move, and it can come exponentially right back down to support. Be careful. You've been warned. All right. AI is on the list this morning. They have earnings coming up. Was it today or tomorrow? Today, this afternoon. Be careful. They're losing money. Expected to lose money. And beat over here, but beat on losing money. Oh, we lost money. Lost less money than people thought we would. Be careful. All right. So ES looks like it's continuing to retrace back into the box overnight. I wish this thing would just hold something. This is sloppy, corrective, nasty, gnarly stuff right here. And probably get the same sort of correction. Same sort of move. Then we get the same sort of move. Just be prepared for it, all right? In Q, not a lot happening right now. Just kind of holding at the highs. If they play Let's Make a Deal today, just think you'd do a blow off top. Like crazy move up, FOMO, fear. And then in the coming days, maybe next week, we rip everybody that got long and we go down in a big down. And everybody's like, what the beep just happened? All right. Please be careful. Now, Patrick, if you're throwing earnings today, I don't care. I'm looking for stuff moving this morning. So Russell, that's the goal of the morning thing. Just sideways in the box. We went back to the bottom of the box. We came back up, tried to go to the top of the box, probably going back to the bottom of the box, and may break out and go lower finally. Watch that one. Oil, continues to push lower overnight. I was kind of expecting that. Now, if we hold the 67 area here, that orange box, I mean, look, it went right into the target. Anybody that wanted to doubt when we were up here last week, and I was like, we're going down to this target zone. Look at that. All the way to the bottom of the target with that spike down. We can get continuation if it doesn't hold. If that orange box right there, that support doesn't hold, next target down. Right down here around 60. Are you prepared for that? I mean, that's why I added a long calls on SCO yesterday. This one banging up. It was 29 a minute ago, but now we're back down to 28 pre-market. And getting a little bit of pullback. Oil must have spiked on that, on whatever. So watch out. This one can keep going higher because this is ultra short. This is leverage short oil. Don't trade leverage stuff, but that's how I'm taking advantage of the oil chart. All right. Yeah, I see it was down on the list too. So, all right. Gold getting a little pop, but still looks like, I mean, this just looks like a little correction, and it needs that final little push to finish this pattern up. Now that could be it. That, yeah, quite possibly that was it, but it just doesn't look complete unless it gets a little bit. I mean, that was the 50%. You can hold it the 50% retrace, but that 618 and that roadmap line, that's a beautiful spot to come down and test right in here. It's my expectation. All right, I expect it to roll one more time. Then SI1 exclamation point, silver looking like it might reverse here. That's what I expect gold to do. Touch that right there, and then start off on an upswing. And today may be the day I look for a silver position, although I really want to see it break above this high right back here from like a week ago. But this is time to start shopping for SLV, long-term position. Don't go, we're talking maybe 2025 if that's available. I don't know if they have 2025 contracts available, but that may be something to pick up, especially look at synthetic. I know Goose and Sledge, I know you guys like that sort of stuff. Think about it. This thing can go up to like 35, 40, possibly into 2025. And set up much better than gold is right now. DXY continuing to churn right at the high here. I don't know. It could come back up and retest this junk right over here. It could. Put that straight. See how it was strong resistance before. We could come up there one more time before we roll again. I do think this pattern shows that we're probably going on down. And that was probably, this could be a big three-wave situation. We could come on up a little bit. Let's see. And we could come on up just a little bit more and then roll over and go down even bigger. How could I be wrong? We could come up here, break just a little bit higher, and then get a repeat of this move from there, take us on down here in the low 90s. All right, bud. Ouch. Looks like the market just opened. Cool. Lots of alerts. And yeah. You know what the chart said? This was going down. We're at resistance here. We can find support here. We could come on down. The orange support box hanging out here. I don't care what politics you want to talk about. The chart looks like that was the correction, and it can hold here and turn up again. All right, all their political mess can be over, and this can be it. And so be careful. Bud does not have to continue lower. I don't care what kind of boycott and whatever that you want to talk about. If it does break that support, then 38 would be the target. But right now, it can find support here at this zone between 50 and 53 and turn up and go higher high. And this is actually one of the most bullish setups that I track. That potential right there. Let's draw this. The potential move, let's just say it goes all the way to the bottom here. Would set this up to go up into this $80 area right up here. Yeah, IWM, I think that just filled the gap. Quite possibly. And I missed it. Let's check it out. What we got? Yep, filled the gap. Awesome. Didn't get that trade. All right, target looks like continuing down, down, down. Having a little rough time here. Look, almost exponential up and big move back down. How low can she go? Let's run off the low to the high. We can hold support here down to 97-ish is the zone here. This is the support zone. If we don't hold this, then we're going lower low, and that makes 0. Let's see. We got to fix this a little bit. That lower low, jeez. Yeah, not looking good for target here. That can go way lower. All right, AAP. Also looking pretty rough. That's a move down, back down to the lows from COVID. I mean, I don't know about you, but cars are not getting younger on the road. Big move down. AAL. Just churning sideways. Came up short of the head and shoulders failure. I don't know. That failed to go higher, failed to go lower. Just chopping sideways. That's my primary expectation on AAL. Sorry, Goose. Some more sideways. CXAI. Just chopping on the roadmap line. That's volatility. Nothing. I don't like it. Garbage chart. AMBA. Popping down. Just more chop. For semis to be rocking as hard as they are, that looks gnarly. CRWD. Potentially trying to break out here. That's positive. We could see this rally right on up here. That's the potential breakout right there. Let's see. And if we go below 100, yeah. Not bullish on AEL, yeah. Just more sideways, though. It's not really bearish. It's just more sideways on AAL. And then box, yeah, I mean, it's more sideways. A lot of these charts just look sideways choppy. Not awesome. HPQ, ouch. Right back to the roadmap line. Tried to break out, couldn't do it. Try to hold support there, and then we'll try again, I guess. Lumber liquidators, nice pop. I mean, that's 22% today. Right up to the roadmap line, though, and resistance, resistance. Zooming out on the chart. Oh, boy, that does not look good. They are not executing very well right now. You know, this has been down trending for a while. Got a little pop on COVID, and then just bled it back off. Not outperforming here at all. Car, Avis, choppy, hot mess of a chart. Making some money, but that's, I don't know. That's not a chart. That's a garbage chart. ESLT. Ooh, finding resistance at that prior high. Right up into resistance. We get above that. We can possibly go higher here. Got to get above it. If you want to, oh man, look at that. Right off the 618. If we can get above that, 266, 294 on the upside. I set an alert in here. Set an alert to watch that one. Twilio, coming up into the roadmap line. If we can get above this resistance, that one be on. I've made a bunch of money trading that one in the past. Set me an alert here. That's also one to keep an eye on. SCO, like I said, that one potentially going to go up to 35 if oil really pushes down lower. Although this one is leveraged and it does have a decaying asset thing to it. So be careful. This would be a short-term play. I'd probably get off if it pops up to 30. Makes a higher high than right back here. Get off and get out of the way. Z-Lab. Looks like it's going in the toilet. Garbage chart. Tech, just chopping sideways. Nothing to do. This does not look like, I mean, that's potentially a roadmap line bounce, but right now, bigger picture is just sideways chop. It's going to have to get up here above this stuff to get higher. AZN. Looks like that one's going to retrace to the roadmap line in the coming days. That would be what I expect. That played out at the 1272 and retrace. UAL. I flew on United. That one, if it can get above this resistance, can get an extension out to 59, possibly 64. Does have resistance right at that prior high, which has been resistance for a year. AVGO, nice spike, but now the exponential crap. Exponential crap going up, exponential crap comes right back down. Be freaking careful. LRCX, looks like another exponential thing. Probably going to exponentially come right back down to test this at some point here. Probably going to come back. Maybe not today, maybe not tomorrow, but likely to come back, retest that point from where it broke out before it goes higher again. BLTE, wow, that's a big gap down. Biotech, pharmaceutical, be careful. And then SOXX, getting a little pullback, but we could see extensions. That's getting played out also. My play, SOXL, I got off of this yesterday on its inability to hit that target up there at 27. It may actually do that in the coming days, but for my money, I was already up 200%-ish. I jumped off. So, all right. UAL pending pilot contract. Yeah, we'll see what happens. I mean, they can break out, they can break down. We'll see. Bias for the day. That's what everybody wants to know, right? JT, what do you think is going to happen? I think we're going to churn into whatever vote happens with Congress. This might be the day that I watch a live stream of Congress. That's like my least favorite idea of fun, but I may turn on the live stream just to see what happens, what transcends out of this thing. I might. I don't know if I will or not, actually. I may not. Oh, look at that. This turquoise can kind of makes me see through. That's Mango Monster right there. All right. So bias for the day, kind of sideways. Maybe we may do this thing and this thing because that's what we did here and that's what we did over here. So we may do that again because the market likes to do things. It just did. It likes to keep doing the same patterns until something upsets the cart. So this one over here on NASDAQ, we may see this kind of pullback right here. Could see lower, back down into 14,000 before we can get that next extension out. Something like that. Yeah, puts it right up to the prior high. Could happen. Might, it might. Yeah, I went through RTY. RTY just more sideways. It already filled the gap from yesterday, so that trade's, you know, if you're in opening bell alerts, that trade's done. And bummer. So, alrighty. AI spiked down. Yeah. Didn't really spike anywhere. Depends on your time frame. That's not really spiking. That spiked up, if you want to call it a spike. That's a spike. Today is just an inside candle, not a spike. All right, everybody understand that, right? Today, that's an indecision inside candle so far today. That was a spike. Gap up, spike high. I mean, that's rally strong, rally strong. Spike down is lower than anything we've seen. This is just a retrace inside day. The low is higher than the low. The high is lower than the high. That's an inside day. Even if it was green, it's still an inside day. All right. NQ could pull down ES, but like I've been talking about, the yesterday, I was talking about that. Maybe I didn't make it clear why it was interesting to me. Let me pull up this chart right. Where is it? Right here. Right here. S&P 500 outperforming the equal weighted S&P 500 by a large percentage, almost 10% here. That means that the other 495 companies in the S&P 500 have an opportunity to catch back up and outperform the total index. So you can see rotation out of the big names that have been driving us right now, and in, you know, kind of spreading it out into everything else. All right. That's where we could see some opportunity, and that's also what we're seeing on the S5FI. When I was talking about that, this is sitting at 33. Huge opportunity for this to go higher while a lot of those big names pull back. And big names being like Apple, Microsoft, Nvidia, stuff that's been absolutely crushing it this year. You can see those names starting to lag a little bit as the rest of the market catches up. Things like Amazon that's still down 30% from the August highs. I think it's 30%, maybe it's 20%, 25%. Well, a little less now. 20%. Still down 20% from those August highs. That's still a huge opportunity for money to flow over to Amazon, catch this baby up, while NASDAQ just churns. You know, some of the other stuff rotates out. So keep in mind where the opportunity is. Yeah, it's just we have a couple things spiking, and money has not really flowed into a lot of other things. So, all right. I'm going to keep up with this. Looks like we may actually retrace here. That's looking like could have been retest the top of the box and go back up. See what happens here. Like I said, if they pass a deal, we may just get a FOMO crazy spike up and then crush down. Be careful. Stay on your toes. I would be kind of risk off. I'm risk adverse right now. Risk adverse. That'd be my bias for the day. Risk adverse. Don't get into stuff right now. This is uncertainty. Giant uncertainty. What happens next? Risky times, as I called the 30 Minutes of Awesome live stream. If you want to see more on this stuff, go check out some of my other live streams. I talked about it quite a bit yesterday, last evening, during 30 Minutes Awesome. Go watch that one. Come chat with me in Discord if you want to ask more questions. Links in the description. Make sure you subscribe. Make sure you hit the bell with the notifications so you know when I go live again tomorrow and talk about where we are after we get some of this news. Like, are we going to play Let's Make a Deal? Are we going to, just, hey, whatever. Forget it. We're not playing Let's Make a Deal. We'll see. I mean, the whole thing's ridiculous. Messing with a $30 trillion artificial debt limit when really the debt is like $212 trillion of unfunded liabilities. So this is all ridiculous. It's all ridiculous. All right.